Welcome, everybody. Thank you for joining us today. My name is Sean Moss with Down Payment Resource, and today we are going to talk about those darn DPAs. We know there are a lot of misperceptions, misinformation, confusion about DPAs, DPA transactions, down payment assistance programs, how to do them, how to work with first-time home buyers, and so forth. So we're going to tackle some of those today. We're going to be candid. We're going to confer with our panelists of realtors and loan officers here. And we're going to talk about the nitty-gritty details of getting DPAs done right, winning the bid, and so forth. So a little bit about Down Payment Resource. Well, I'll get to that in a sec. So we will give you a brief intro or just kind of an overview of what's going on with down payment assistance programs. So State of Dpa, if you will. And then with our panelists, we've spent the last couple of weeks preparing for today, putting on the table some of the obstacles and challenges that we're seeing, that we're experiencing, that we're hearing about from peers, that clients bring to us, that sellers express. And so we broke that down to 5 of the top obstacles that we all face, especially when working with down payment assistance, working with first-time home buyers. But we're not just going to talk about the obstacles. We brought our panel together today to bring solutions to you based on their expertise, based on their experience, based on the clients that they're dealing with, the programs that they're offering, and so forth. So you're going to hear about the experts, including next steps and best practices for how to work with these programs, how to work with the seller, how to work with your loan officer if you're a realtor, how to build agent loan officer relationships that are productive and fruitful. A little bit about Down Payment Resource. We are a national database and a matching engine of all of the homebuyer programs across California, as well as across the country. Our technology helps you connect homebuyers to down payment help. We are integrated into MLSs and property listing data. For example, our most recent MLS partner is California Regional MLS. If I can ask Melinda, who's in the background from our Down Payment Resource team, to post CRMLS's Down Payment Resource product guide. It includes information about Golden State Finance Authority, about how Down Payment Resource works. So if you're a member of California Regional MLS, you have access to all kinds of tools to bring these programs to the forefront for you and your clients, as well as with Barris. And then we also have tools for real estate agents and loan officers that we'll talk about at the end. But our goal today is to be light on content and heavy on dialogue. So with that in mind, we're all here to help you connect home buyers to the down payment help they need. And with that, I want to introduce our partner, Carolyn, Director of Marketing from Golden State Finance Authority. We've worked together for a couple of years now through California Association of Realtors, through events like this, to raise awareness of these down payment programs and make it easier, more understandable, and more readily accessible for all of you. So with that, Carolyn, say hi, and if you want to introduce our panelists.
Hi, everyone. Thank you for having me today, Sean, and those of you at Down Payment Resource. I'm excited to be a part of this panel. I'm excited to be bringing some actual loan officers and real estate agents that we have been working with for many years to this discussion to really share their one-on-one experiences out in the field, working with down payment products and working directly with Golden State Finance Authority. I'm Carolyn Sunseri. I'm the Director of Marketing at Golden State Finance Authority and actively involved in a lot of the outreach and training and education for lenders and realtors. So with that, I'd like to introduce our guests today. We have Jenny Gonzalez, who is a realtor with Keller Williams Corona, Todd Pankratz, which is a loan originator with Wallach and Volk, and Dawn Tobin, a loan consultant with Loan Depot. And at the moment, Dawn's not here, but we hope that she will be joining us in a few moments.
Okay, so like I said, we want to be light on content and heavy on dialogue today. We want to dig in with our panelists into some of these obstacles. So I'm just going to briefly give you an overview of the State of Dpa. In California alone, there are 350 homebuyer programs. Those can be down payment assistance, closing cost help, tax credits, affordable first mortgages, and more. 65% of those are funded and available today. 267 of those are down payment assistance programs, offering that at closing help with down payment or closing costs. All of your state or all of your housing finance agencies stayed open through COVID. They remain open today. Now, some municipalities and nonprofits had to pause their programs, but that's old news at this point, quite frankly. So they're all back up and running. They're all operating. In fact, housing finance agencies had record years in 2020, and many of them and Carolyn, maybe you can speak to this for a moment, continue to see record volume into this year. And for loan officers and realtors, that's all purchase business. We're not talking about refi volume. We're not mixing refis into this conversation. But Carolyn, any quick insights into what your volume looks like at Golden State?
Yeah, it definitely has been influenced by the low interest rates. And even though housing prices have been escalating for some time now, it does seem like this last year and a half, we've seen a large increase in homeowners getting into new purchase transactions here in our programs as well.
And quite frankly, despite some of the obstacles we're going to talk about today. So big picture here, the point is down payment assistance is still available, still viable. It's not going away. It didn't go away. And in fact, there's just more attention on down payment assistance and affordability now than in a long time, to say the least. So who offers these programs? Obviously, Golden State Finance Authority. There are other state and county and city and municipal entities that offer down payment, closing cost help, and so forth. Some employers offer programs to recruit or retain talent. There are nonprofits all over the state of California. And quite frankly, many of these can be used with Golden State's programs. And then some of your own local realtor associations will sometimes have, foundation funded down payment assistance grants, closing cost grants, and the like. So look out for those too. Now with that, let's dive in. So the 5 obstacles that we identified that we want to talk to you about today are inventory. Now that's a real problem. It's limited. There are especially problems in the affordable price bands. New construction isn't keeping up with population growth and demand. There are all kinds of issues there. We're going to talk about that. There's confusion about down payment requirements, particularly among consumers. Now, perception is reality, so it presents us with a real issue we have to tackle, but we also need to understand how and when to educate buyers about the real down payment requirements and the real opportunities in front of them. Now, we all know that agent and seller apprehension about DPAs and even FHA transactions is a big deal right now. So we're going to talk about that and offer some solutions there. There have for a long time been misperceptions, I would say, and confusion about the extent to which a down payment assistance program prolongs the transaction. So we're going to tackle that. And then we're going to round it out with establishing fruitful, productive, meaningful agent loan officer partnerships. What are some of the pitfalls there? What are some of the opportunities there? So let's dive in. I'm going to present the first issue here, and then we're going to lean on Todd and Jenny here and talk about what we can do about it. So inventory is limited and unaffordable. The problem here, obviously, is that we have for a while now been experiencing historically low inventory. There's really no meaningful solution on the horizon. Days on market is decreasing. There's high demand driving up home prices, bidding wars. All of this leads to a scenario where buyers are struggling to compete, perhaps more than in recent history. So with that in mind, Jenny, let's go to you first. What are some of the things that we can do? What are some of the things that we can rethink in order to solve for the inventory concern?
Thank you very much, Sean. I really appreciate being able to talk today. What I've actually been doing and I have put into place is your number one, knocking on doors. Me and my partner have been knocking on doors and literally getting the word out to buyers and to sellers regarding these programs. And regarding inventory, that's the only way we're going to be getting inventory at this point is knocking on doors, because sellers are right now not knowing what to do, what position they're in, where they can go, and all those other kinds of things. So we have to help them know what their next step is before we can teach them that they can sell so they can put their homes on the market. We can tell them that we have people that are ready to buy, because we have buyers in our pipeline that are just sitting and waiting for these homes. We can prove to them that we have these qualifications for the homes. Also, we've been looking at the properties that are on hold and why they're on hold, contacting the agents, and the pendings that have been pending for more than 30 days. Maybe there's something going on in the transaction. Those are my top 3 things that I'm doing right now for my buyers to try and alleviate that, trying to look for what's active and available on the market.
Good deal. Todd, your thoughts?
I think that mainly from the lack of inventory, you have multiple offers on properties where in some cases people are having to pay an appraisal gap and some things like that, and they may exhaust all of their own funds that they've already saved up. So this is where the products and programs like with Gsfa come into play, and they can tend to help with that, fill that gap or add to what they have saved and make for a transaction versus losing one.
And Dawn, I see you've joined. Thoughts on the inventory issue? I think you're muted. Mel, can you help her in the background?
I'll jump in while we're waiting for Dawn to come on board. You know, the one that I like to talk about is kind of rethinking the vision or helping your buyers to expand their vision. You know, a lot of times home buyers get stuck on what they visualize as this perfect property, this perfect home, my forever home. And while it might be, it also might be a stepping stone to another property down the road. And when inventory is really low, you know, can a real estate agent expand their horizon, ask them to look at properties that maybe have some cosmetic issues that, or some improvements that could be done in a cost-effective way to make it better, or a property that's 2 units instead of 1 unit. Like, have they ever considered a duplex as an opportunity? You know, they can actually bring in rent from the other side and live in the one side. You know, thinking outside the box of the exact location or area that they want to live in, maybe in, you know, within 10, 15, 20 minutes distance, there are other neighborhoods that they could consider. Just opening up more inventory by opening their minds to what might be a good fit for them. And even looking at products like renovation loans or 203K loans. There's an energy efficient mortgage with FHA that allows them to finance in some of the improvements on a house so that it doesn't have to be the perfect home that they're looking at on that listing and competing with, you know, hundreds or 50 or 60 buyers. Maybe the loan officers or real estate agents have some ideas on that as well.
Yeah, and Jenny, a specific question. What are you telling buyers right now about what this process of, you know, submitting offers is going to be like? What's your counsel for them?
I pretty much am telling them that they are going to have to look under where they're approved for with regards to their loan. So if they're approved for 350, they should be looking at 300. So that they're not looking for stuff that they're not able to get because of the bidding wars that are going on. If you're looking for something that's 375, look at 340 to 350, because you're gonna eventually probably end up going higher in the first place. It really depends on the market, because some markets you're getting at list price or maybe 10,000 over list price now. Like in Corona, we're not seeing that $100,000 over list price anymore. We're just seeing more of a $5,000 to $10,000 because they are pricing them closer to where they need to be. So I don't think that's totally the problem right now. The problem is the lack of inventory has pushed the home prices up so far that we need to have them look at other areas. Okay, let's look in Corona, but then let's look in Riverside. That's $100,000 less and a 10 to 15 minute drive, or south to Lake Elsinore. You know, in my area, that's kind of what we say is look at the area that you're in, and then let's look at the properties that are in the surrounding areas and travel one morning to see if that is a bad commute for you. Those are the types of things that I'm talking to my buyers about, and being realistic and letting them know that when they go out the first time, their first offers, second offers, sometimes their 20th offers are not going to be accepted, but sometimes they will. If you have the right agent that knows how to write the offers correctly and highlight the correct items and all the important items on the contract, and communicate with the other agent before the offer is even made, that is how you're going to get your offers accepted.
Yeah, that's good stuff. And Dawn, it looks like you got the audio worked out. Your thoughts
I believe so.
Your thoughts on inventory?
Can you hear me okay now?
Yes.
Great. Okay, so sorry. The inventory in general, it's been going very, very fast. I've seen a slight little bit of change in the last couple of weeks. But the key thing is, I think we talked at one time too, your down payment assistance program, some people don't want to accept the offers on that. It's a lot of it has to do with, we got to just make sure they're aware of what, how easy it is to do. It gives them the opportunity with down payment assistance as well to make higher offers on properties. And so that's a big deal when we are in the market that we're in right now, just for your buyers, as everyone's been talking about, to be very, very open in what they're doing and their choices.
Todd, any final thoughts? And then we'll move on to the next concern here.
Well, with regards to offers and placing offers and potential apprehension with offers using down payment assistance, with the Gsfa products, with the Gsfa programs, there is no secondary layer of agency approval that you need, and so it has no bearing at all on timelines, on your closing timelines, on the potential to extend them. So that's a huge plus. So just, you want to reassure your agents, listing agents, buyer agents, your clients that using down payment, these forms of down payment assistance, there's no drawback to it as far as escrow closing timelines. That's a big, huge thing.
Yeah, we're going to revisit that here in a couple of minutes, probably twice. But let's talk a little bit first about confusion, particularly among home buyers, and particularly among renters that could be home buyers, but for the lack of awareness of actual real down payment requirements. So I'll set the stage here. We did a study with the Urban Institute a few years ago, and this is just constantly reinforced by studies from all manner of reputable organizations. But when renters are surveyed or potential home buyers are surveyed and asked how much they think they need as a down payment, we consistently see 2/3, 3/4 of them have this misperception that they need 20% down. And it's somehow this magic number of 20%. I think we all know where it comes from or have ideas about it. And we know that's not the case. You don't need 20% down to buy a home, right? But that's not the problem. The problem is so many potential first-time home buyers still somehow believe that. Where it comes from, we can talk about that all day, but the perception is reality among consumers. So given that there is some confusion about down payment requirements, maybe some misperceptions that you have to be a first-time home buyer to use down payment assistance, or that you have to be a low-income buyer, or that you have to have great or excellent credit. If these misperceptions continue to linger, we're just going to see millions and millions more buyers sideline themselves. Not that we necessarily have the inventory to sell them, right? But those are two distinctly different problems. So let's talk about confusion about down payment requirements. Todd, I'll go to you first. What are you seeing? What are you hearing from consumers as they come in the door? What's your education strategy? What's your advice here?
Well, most people who are buying for the first time tend to be looking for some kind of down payment assistance or first-time home buyer assistance, and basically you're just as you'd educate anybody on, you're going to follow with your agency or your basic program requirements. USDA loan doesn't have a down payment requirement. A VA loan doesn't particularly have a down payment requirement. FHA loan, 3.5%. Conventional loan, little as 3% if you're buying for the first time. So it's not too hard to dispel those things and walk through those things with your buyers and your clients as to what's available, and lay that out for them in those early conversations.
And Dawn, you're a loan officer as
Yes.
well. And by the way, we should have clarified, Dawn and Todd are loan officers. Jenny is a realtor. So Dawn, your loan officer experiences as well here?
Absolutely. The thing I love the best about the Gsfa program is it follows exactly agency guidelines. So, you can use it on VA, and even those are not down payment assistance, you still use it. Why? Because it can help for closing costs. Sometimes it just helps even with the interest rate itself, right? So you're just doing regular guidelines. I'm exactly with Todd on it, is that we don't have to go to a second agency like you do with some other down payment assistance program. So they can be quick. I mean, you can do them within 30 days, you know, depending on the borrower. Sometimes you can do it sooner, you know, 21 days. But I would typically write your contract for at least 35. 45 is of course great, but something like that. But very quick, very easy. You don't have to, you know, worry about a bubble because no income requirements with the Gsfas, no, you know, other second layer. They do have their ratio guidelines, but they have one of the highest ratio guidelines at 45% and 50. So I love using this program, use it all the time.
And all those things you're describing, each one of those factors expands the eligibility pool, right?
Absolutely. Absolutely.
So Jenny,
And it's
from the
available
realtors-
conventional too. Go ahead.
Oh, I'm sorry. Go ahead, Dawn.
I'm going to say conventional wise too. You can use it for conventional. It's a little bit more centered around FICO scores on that one. But I mean, it's great. I mean, especially like you said, when you're competing for homes out there and money is short. So that's it. Go ahead.
So Jenny, from the realtor's perspective, what are you hearing from prospective buyers coming in the door? What did they learn from you headed out to go look at contracts? Any other advice or counsel here?
First-time home buyers automatically think FHA and they ask for down payment assistance right away. I don't know why they're constantly looking at FHA. There's so many borrowers out there that have FICO scores and income that they can do conventional. And sometimes their payments can be a little bit less, doing 3% down with a MI factor. But with FHA and the Golden State program, between the two, number one, I want to address, there was one question about income limits. The income limits are divided in between lower income brackets and upper income brackets with regards to the rates. So it is affordable. You don't have to be low income. I saw something on that. And with regards to the approvals, when you get your lender approval, it is included automatically. They've already gone through all the requirements for Gsfa and any other program, and it does not affect your writing your contract. You don't need to even let them know that there's a Gsfa on there at all. Well, you can even ask for, I have asked for closing costs and gotten them with my down payment assistance programs, even recently this year. So it is doable, and the income limit is there. I think at a max, I'm not sure we'll have to have on Carolyn talk about that, but with the loan limits, I know she just mentioned the loan limits. I'm hoping that we get those raised in our county pretty soon, because they're talking about those being raised. So everybody, please have hope that those amounts are going to raise up so that we can have more affordability with regards to the down payment assistance program from from the Golden State program.
Yeah, so Carolyn, I want to come to you for a second. There were a couple things there that we deferred to you on, but I do want to make sure we illustrate for our audience the 3% down conventional option as well.
Yes, so I'll go over a couple of the requirements of the Gsfa programs for those questions that are kind of floating around in the chat. And thank you to Dawn and those of you who shared some of these. The FICO score requirements for our FHA product can go as low as 620 for VA as well, 640 for USDA mortgage loans, and down to 620 for conventional loans as well. Remember, we have two different down payment assistance programs, but all of you who are on this call today are obviously taking that first step, identifying that you could use a little bit more education around down payment products and especially Gsfas. What I encourage you to do is, after today, to take this step to expose yourself and understand this program a little bit better. We provide webinars for loan officers I think there's a webinar going every week that dives into the program for you as a loan originator and explains the different guidelines, explains about the debt to income ratios, and then what are the steps that you do to originate this product. And for real estate agents, you know, yes, you don't need to memorize all of the details of a program to understand its advantages and benefits, but these trainings and webinars still will give you a good overview so that you can kind of identify the need of a borrower and then build your network with those loan officers who are experienced in this program. You know, having these two loan originators, two loan officers here on the call today was to give you real-time experience from them about what it's like to work with these programs and how flexible they are. You need to be working with loan officers that believe in these programs and are experienced. We also have videos on our website that I highly encourage all of you to go watch. We've produced a video specific to the Platinum program and another to our Open Doors program, where there's a discussion about the program requirements, the advantages of the product. Really great. I highly encourage you to go watch that. It's on our website. It's also on our YouTube channel. But that's that first step. You know, we often think it doesn't make any sense that people still think that there's 20% down, and yet time after time after time, we run into buyers who really do think this. Research and studies keep putting that information out saying it's true. And you have a problem when you're looking at a mortgage calculator that they look up on Google or on a search engine, when the field right there defaults to 20% down just to help them calculate what their mortgage might be. That right there is creating a misconception. So it is really out there. This misconception is real, and it's up to us to take steps to educate ourselves so that we can then educate the borrowers.
Yeah, that's
one of the other guidelines I wanted to share had to do with that debt to income ratio, and that we actually can do debt to income ratios up to 55% in some situations.
Yeah, these calculators, especially when you're looking at properties, great clickbait. You can buy a $500,000 home with a $1,900 a month payment. Well, yeah, but you know, go adjust your down payment and see what that payment looks like. Nonetheless, we know what we have to combat here. So with that, let's move on to probably the hottest topic today: seller apprehension, and probably informed by agent apprehension about DPAs. So Jenny, I'm going to go to you first for the realtor perspective. What are you seeing from sellers? What are you seeing from their agents? What do you hear? You know, we know that there have been bad past experiences from agents. You know, worked with a DPA buyer one time 3 years ago and it didn't go well. Who knows what actually went wrong, but the DPA gets blamed. We know that the sellers are informed by their agents. And we know that sometimes, as you hinted at earlier, Jenny, contract offers don't frame the DPA as a value add, or you've over disclosed and you've disclosed things unnecessarily, and that's going to cause pause among sellers. So given that, what are you seeing? What are you hearing? What are your thoughts here?
Well, first of all, in the beginning of COVID, we had a whole different market to begin with, right? And agents took it upon themselves over the last year and a half to pretty much put FHA buyers, first-time home buyer buyers, down payment assistance buyers pretty much out of the loop until about the last 2 or 3 months. And I've been seeing FHA offers being accepted, VA offers being accepted, down payment assistance offers being accepted. The biggest thing I think that we need to address is that we still do need to ask for a little bit of help sometimes from the seller in closing costs, even though they're still on a down payment assistance program, because sometimes there's a little bit of a gap with regards to the funds. It really depends on the buyer, but the listing agents seem to think that it's going to hinder the offer, where in turn it's actually a better offer because they've had to go through more hoops than the regular 10% down conventional buyer in order to get this loan. They have to go over education. They have to dot their I's and cross their T's. And it really is on the listing agents that really have put us in a position to where we are excited now to be getting these offers accepted, where we should have been able to get them accepted prior to. But because the market was so frenzy and because the inventory was so low, they said, we don't need to accept these offers because we have a cash offer, or I have a 50% down offer. And right now we're not seeing that. We're seeing it turn a little bit to where, because the buyers are a little bit more hesitant, we're seeing more days on market. We're seeing up to 30 days on market now. So sellers are a little more motivated to take down payment assistance than they were before.
So Jenny, I was gonna, and I'll go to Todd here next, but Jenny, I was gonna ask you what changed, but it sounds like really it's a subtle change in inventory, the dynamics of inventory in your area that are leading to a little more allowance for FHA and DPA buyers.
Yeah, we saw a lot of $1 million homes, high-priced homes that we're selling. Now we're seeing more of the first-time home buyers that are getting the homes rather than the investors, the cash buyers. It's more the regular home buyers that we're used to now. So now the sellers and the listing agents, I think, are becoming a little more aware of that. And so now they're a little more understanding of the offers, we'll say.
That's good. That's a trend we hope continues. And for our audience, chime in the Q&A or the chat. Is that what you're seeing in your part of the state? So Todd, I want to go to you and kind of frame the question. Is a DPA buyer less creditworthy? When we're talking about agent and seller apprehension, I think sometimes that's a big part of where that stems from.
No, I don't think there should be a perception that a DPA buyer is less creditworthy. In fact, there are certainly credit minimums that they have to they've got to have. So there shouldn't be that apprehension there at all. And I think it's also important to know to realize too that DPA in and of itself is these funds don't just have to be used for down payment as well. So they can be used for closing costs, which can also help in the negotiation of a contract where you might have where the seller doesn't need to pay as much, or I've even had clients that were paying part of the seller's closing costs in order to get a transaction done. And so you can use these funds for more than just down payment assistance, or just the down payment side of the assistance, I should say.
And for you, and then Don, in the last, let's say this year, in the last year or 2021 to date, what's been your role trying to help buyers, your clients, win these bids? Are you stepping in and talking to sellers, talking to their agents?
Yes, on a resale side of it, absolutely, because I feel it's important when you partner yourself with someone like myself or Todd, that definitely you call the listing agent and be proactive. Because if you're hooked up with somebody who's going to team with you on that, could call the seller, or really the seller's agent, let's say, we call them and we just let them know, here's what it is. Explain to them that they don't have to go to a second agency, explain to them that it's a lower credit score, and just let them know that we're following FHA guidelines, and let them know you're an expert on it. So that's a really big deal in getting the offer accepted, because, and then I also throw it in there. Well, if your appraisal comes in low, these may, especially if it's a family that still has money, I said, this is extra money that they have, to use possibly, if they qualify for a higher DPA than they're really wanting, I can say, by the way, they qualify for a little more if we happen to need to increase their down payment assistance. So being proactive with your listing agent is huge. And not everybody comes in wanting down payment assistance, but I still tell them, here, are you sure you don't want this? Let me explain to you, within 3 years, if you're doing a regular platinum, it'll be forgiven, or the on the platinum program, platinum select, it gets forgiven right away. And most of your open doors program is forgiven. There's just a small portion that isn't. So just education is the biggest thing out there, and so this is why this is awesome, so more people can learn about it.
Yeah, and so Todd, kind of the same question. Do you also find, well, first of all, are you hopping on the phone with sellers and their agents, but do you also find that helps mitigate some of their apprehension?
Sure. Yeah, we'll do that all the time. We'll contact the listing agent, or they'll contact us either way. Especially when you're in a multiple offer situation, it helps to have the listing agent feel much more comfortable with the offer and know that there's some flexibility in there too. So if they're in a counter situation, there could be extra funds there available if needed to cover that gap. So it's very important.
And Jenny, just one last question here. As a realtor, I mean, this must be, it must feel good as the buyer's agent to have a loan officer like that go to bat for you and work on your behalf and help set expectations and quell concerns and so forth.
Yes, exactly. The only problem I've ever had is if one is a little bit too pushy, but most of them are not. They just are generally, they care about our clients, and they have our best interests, their best interest at heart. And my best interest at heart. So that's why I like working with them, because it's very important for the loan officers to work with the agents to get the offer accepted, because it's their interest to get paid just as much as it is to ours.
Yeah, we're getting into agent LO partnerships, and that's another topic we're about to handle here. But Carolyn, any final thoughts here on agent and seller apprehension?
The only thing I might add is this last thing on this slide about illustrating the value of DPA, you know, to remind yourself that your own apprehension can come across to an agent or to a loan officer. And so it's important for you to understand the value that DPA provides. It's a tool to help people who don't have a lot of cash resources purchase a property maybe sooner than they thought possible. And that while there is a reflection in the interest rate for a down payment assistance program, that's what it actually is a tool to create an opportunity that might not otherwise be there. And in terms of conventional financing, instead of having to go with an FHA or government loan that has long-term mortgage insurance, you know, there are conventional financing options that only require 3% down, and with a down payment assistance program can end up covering that and part of the closing costs as well.
And you mentioned something there that I think is a good segue. Now I just forgot what it was, but nonetheless, so DPA extending the transaction, that's another problem that we hear all the time. It's another concern that I think is unfounded often, that perhaps prevents agents from accepting these deals or taking on these clients, or working with the right loan officer partners to get pre-qualified and go through the right motions. So we all know that anything can cause a delay. In preparing for this, we talked about title issues. Now we've got appraisal issues that we're all dealing with, right? There are a lot of things that can cause a delay in a transaction. So we can't just automatically blame the presence of a down payment assistance program. That said, as loan officers, you guys are looking at cash to close up front, making sure that funds are available or that alternatives are researched. Or maybe the DPA application was started late, and the mortgage pre-qual was done, but cash to close wasn't looked at, and so that gets started late, and then a DPA gets brought on board late, and then suddenly it's the down payment program's fault. Well, not really. The right steps weren't taken up front. We're going to talk about the steps here in a moment. Homebuyer education too. I want to talk a little bit about that, the value of it, both for the client, of course, but also for loan officers and for realtors, having better prepared, better educated clients. And then, of course, miscommunication can just lead to extensions of transactions. So framing all of that and just knowing that there are plenty of other reasons why DPAs sometimes get a bad rep. Let's start with Dawn. What are your thoughts here? What can we do to mitigate concerns about DPA extending the transaction?
Biggest thing is to, and I guess I kind of covered a little bit before, is making sure that they know that the buyer is either already pre-approved or pre-approved or actually conditionally approved. It's the biggest stress is to let them know that only our underwriter, the underwriter of your lender, is going to be looking at the file. They are not going to be checking for anything else. So I always tell them, as long as they meet the Fico requirement and the debt to income ratio, that's all that matters. So nothing extends it whatsoever. The loan, and also let them know that to get the note and the deed of trust, we just click on the button, put it in there, and it closes just as quickly. You're not chasing, the other thing is you're not chasing down bank statements. You're not last minute gift donor doesn't wire from the wrong account. So quite honestly, your DPA is guaranteed funds, and you're not at the last minute, oh, I spent it, or oh, we can't source it. So that's definitely what we use. And a lot of times, even getting the borrower to do the home buyer education class does a lot of times, make it extend out, but we don't have that problem with the Gsfa programs.
And so Todd, same questions here to you, and then I have a separate question for you and Dawn.
Well, two things. I think if there's the first time home buyer education course is a requirement of it, it's important just to set that expectation in the beginning so that they'll know to get that knocked out of the way early, and then it really doesn't become an issue later. And then the other thing is, question that comes up a lot is well, okay, I love this, the idea, I love the concept of this program from a buyer standpoint. What do I need to do for this grant, or how do I need to go about it? And the answer is simple: nothing. We handle the whole thing for you. There's no, you don't need to go anywhere. You don't need to apply anywhere else. You don't need to go through a whole bunch of other things to try to requisition this. And that sets them very much at ease in knowing that they don't have to do anything extra.
So 2 questions for you, Dawn and Todd, and then Jenny, I'll come to you. I'll start with this first. So we've talked a little bit about timelines here, but will you say what is your timeline for a Golden State Finance Authority transaction? Or can you commit to realtors right now today that you're closing in 30 days or less or more? We'll go Dawn first.
I know, I'll mute myself here. Absolutely. We don't have any problem whatsoever closing them in the 30 days. You know, going less than 30 days depends on the borrower, but I mean, I've closed them in 21 days. It's not a problem at all. I mean, 2 weeks is tougher, but we could do it. You know, you can't be rescoring or doing anything like that. But yeah, under 30 days all day long.
Todd, same question.
Yeah, the potential for any obstacles that come up have nothing to do with Gsfa. So, you know, 30 days all day long, like John just said, in some cases less. You know, the biggest issue now are getting appraisals done in time. So there's those things. That there is no element within there anywhere that the fact that it's Gsfa or DPA would have anything to do with the timeline. So you can easily do a transaction in 30 days.
Yeah, and again, appraisal not related to the DPA, right? So we can't blame the DPA because the appraisal took 5 weeks.
No.
So another question for the 2 of you, and then Jenny, I want to get your realtor perspective here. Can one of you, Todd, I'll just ask you, can you clarify for our audience, what is the difference between pre-qualified and pre-approved? I just want to make sure we cover that.
Yeah, well, pre-approved, you know, clearly you've either run the DU or LP, and you have a bona fide, you know, legitimate pre-approval. You have all of the pieces of documentation you need there to justify that, and or we will underwrite a loan in some cases with it as a to be determined property. So there's a difference. Pre-qualified, I think you only have a few of the pieces, and you have no automated underwriting findings at all.
Okay. Dawn, anything to add?
No, I agree. That's exactly it. You know, a TBD or credit approval, the underwriters actually full on looked at it. We're just waiting for the contract, and then we can order an appraisal. And pre-approved, I would consider, I looked at credit, income, assets. I know where I'm at.
All right. So Jenny, so given all this dialogue so far, I mean, we're still talking about these concerns that a lot of agents have about DPA extending the transaction. So address those, but also a specific question: what are you looking for from a financing perspective for a new client before you really start to engage and take the next steps? Will you do anything with the pre-qual, or are you looking for pre-approval?
I'm actually looking, number one, for them to get number one looked at by a lender first. And then we talk about getting a loan commitment, which is, I think, more important than a DU approval, where they actually go through it and do an underwriting approval first, so that it's like cash. Otherwise, if they just can't wait, there's a house that they have been looking at, then I suggest that they go ahead and get that pre-approval with the credit, tax returns, everything being reviewed. I would not just go off of credit and FICOs alone. And then I would definitely talk about doing the actual, once they get approved, getting that education done first, because that is the thing that everybody waits for last. And if you wait for it last, then that's what's going to extend the transaction. Nothing else with Golden State or this program is going to extend it out besides that, and the buyer not getting everything done. And what I'm seeing is with, especially with first-time home buyers, is they think that they have great credit, and they think that everything is great with everything. And then when the underwriter starts getting into the details of their actual life, sometimes they'll pull things up and then you have to deal with things. That's the only way I can explain why I would like a commitment letter ahead of maybe a DU approval or regular approval, is because the underwriter has actually gone through the whole file and they know everything about the borrower.
Todd, Dawn, Carolyn, any final thoughts here? And then I want to get to our last topic.
Well,
Only-
I just think it's important if any lenders that are on the call, if you're issuing a pre-qualification or pre-approval letter with only a credit report, you're not doing your job all the way. So I would never ever issue anything like that without having all of the picture there. So that's very important. You know, when Jenny goes to write an offer on something, it needs to be substantiated, and everybody's name is on that. So your reputation is on that too. So definitely, I support that. You want to be a fully bona fide qualified buyer.
I was going to agree, absolutely, because I mean, I've seen DUs all day long where some of my realtors say, hey, can you look at this DU from the other person? And I'm like, well, this is wrong. This, you know what I mean? So you can plug anything into DU and make it work. The bottom line is, was everything reviewed accurately by your loan officer? So 100%.
Okay. All right. So let's get into our last topic here, and then we're gonna do some kind of final takeaway stuff. So establishing or building or strategizing around agent LO partnerships. We've been hearing a lot over the last year and a half that agents are having a hard time finding loan officers that offer these programs to begin with, that want the first-time homebuyer business or want this DPA client and potentially stream of clients, and are good at doing these DPA transactions. And I can tell you, I do events like this all the time, day in, day out, week in, week out. The most common question we get from real estate agents is, cool, I found out about down payment assistance. Now, who do I go to get these deals done? And so we point them to Golden State Finance Authority's participating lender list and potentially their top producers, like Todd, like Dawn, who do these programs really well. And you know, they're savvy with the requirements, they keep up with them, they built a business working with these buyers, the realtors that represent them in these programs. However, we also see that, and I think this is born out of the first issue here, agents have a hard time finding loan officers that do and want this business, because many loan officers are not promoting their DPA expertise. They're not highlighting their DPA offerings. They're not active in ways or engaging with the realtor community in ways that broadcast that knowledge, that opportunity. So Jenny, let's actually start with you. From an agent's perspective, what should agents be doing to find the right partners, to build those partnerships? What are you looking for in a loan officer?
I actually am very, very strict when it comes to dealing with loan officers. They have to be able to respond to me in a timely manner. They have to be able to email me back, and they have to know their programs off the top of their heads. I want them to know what the rate is off the top of their head for a program. I need a loan officer that will call the listing agents and explain to them without scaring them the programs. I need a loan officer that will explain the program to a buyer without scaring them about the rate, because that is the biggest thing that buyers balk at me with the program is the rate. So as long as they can explain to them as well as I can about the rates, I try to explain to them about the bump in the rate and what the benefits are on the back end of the loan. We'll go through that later, I assume, but there is such a benefit to it that to me, it's a no-brainer to use this program. And the loan officers that are not using this program, I've asked a few of them and they said, well, our company just doesn't use, they won't do them. So I'm hoping that some of the large companies that I've been talking to out there, I actually sit and I meet with, I get them calling me all the time, and I will sit and I'll have lunch with them. I'll do Zoom conferences with them. And I'm very specific, and I'll tell them right away, I said, we are not a good fit because you do not know enough about the programs. I see you're not a good follow-up person. There's a lot of things that are important in the relationship between a loan officer and an agent. And if you don't have that trust that you know that you can go to that person at any point during the day and they'll say, hey, I'll call you in an hour at least, and not respond, then you know you have a good agent. Because if they can on the spot call, you tell them, hey, I need you to call this agent because I just submitted an offer and it's due in an hour. They're going to be submitting it in 2 hours. I need you to call them right now and explain to them what this program is. That is what I think is important with regards to relationships.
And so, Jenny, one quick question. You're speaking from the perspective of a seasoned, experienced DPA expert at this point, but how did you get into DPAs in the beginning? Did you stumble upon it? Did somebody kind of guide you in that direction? And then how did you educate yourself?
Actually, I've been a real estate agent for almost 23 years now, but I did loans before. I've done processing, I have transaction files. And when I started doing DPAs was actually through transaction coordinating. So I had a lot of files coming in through other agents while I was doing my own files as well. And there were a lot of DPAs. And I'm like, what is this? What are these programs? And this was about 10, 15 years ago. And so that's when I started saying, wow, I need to start using this for my clients because I had absolutely no clue. So then I started using the DPAs, and I even had one client last year that she actually got her down payment assistance, and she ended up paying off all her credit cards. So all she had was the house payment, and that was it. And she's excited about it. First time home buyer, single person, able to buy their first home in their 20s. And that's exactly what we need to look for with our buyers. And with the loan officers, we need them to be able to explain to them how this benefits them.
Yeah, what a great story to tell. And so Dawn and Todd, let's go to you on this last issue. And I'll lead with this. One of the things that we tell realtors about when we talk about marketing, DPAs, and so forth is tell the story about the last client you got this help for. So I'm curious if, in your own marketing, is that something you've thought of or you do? And then generally, what are you doing to reach agents? How are you broadcasting your DPA expertise? And what are you looking for in agents? Dawn, let's start with you.
Okay. I'm trying to think as far as I've been in business for a long time. And so I think my reputation is usually, I probably get more referral out of the reputation side of it. Even all your clients that you close escrow on, they keep referring me to other people as well. So it's known out there that I do a lot of DPA. I will say, honestly, myself, I probably don't promote it as much as I should, but I'm busy with what I have going thus far. But I'm sorry, what was your other question besides that part of it?
Well, to an extent, what are you looking for in agents?
In an agent, okay. Well, it's really important for me. I like helping homeowners. I like to be able to, offer them and get them into their best home. So I like a realtor that also is mindful like myself. Yeah, we're here to make money and we're here to earn a living, but it's twofold when you're also getting a family into a home and you're able to help them out. And then it continues, it kind of boils over from there with all the referrals that come in. So I like a realtor that is able to, it's looking out for their best interest, because then we're all on the same page. If you're looking out for the client's best interest and you're partnered up with someone who isn't, then it's just not as good of a blend. And I don't feel the client gets as best of a experience out of it. So I like it when they're like, oh, we're never using anybody else again. You and the realtor are the best. We can also piggyback after that. The realtors, sometimes they have questions on the loan. They don't want to ask the loan officer again. They make them feel comfortable, direct us back to us. Sometimes they ask us the same questions, and we on the real estate side, we reflect them back in there. So that's for me. I like somebody who has the same mindset as myself with that.
And so, Todd, same questions, and maybe I'll frame it a little differently. At some point in everyone's career, there's a turning point, right? You're chasing business, and then suddenly you realize the referrals are coming in. So, maybe give us both perspectives. Like, what are you doing now to reach agents? But what caused that turning point for you at some point where, all the energy and the outbound promotion turned into referrals started coming in?
Well, I think it tends to, a few years in, when you start out from zero, you have no contacts, you have no relationships. And so it takes a while to build that up. After you're a few years in, then you have that repeat business and you have those relationships built. When you're working with new agents, actually, it's kind of helpful because we all started at zero at one point or another. And when you're working with new agents that don't have any clientele base, they don't have repeat clients, they don't have people who they've listed and sold their properties before who are buying others, they tend to be working with fresh first-time buyer type people. And so it's very helpful to help new agents get off the ground with having programs like this available.
Yeah, that's actually a great point. I mean, you just gave loan officers a path to purchase pipeline growth, right? Go seek new agents and let them know you have the products that you also just said their buyers will likely need. So there you go, guys. That was a freebie. there's your pipeline growth if you got one takeaway. So Carolyn, I want to let you chime in here too, and then we'll kind of get everybody's final thoughts today and takeaways.
Yeah, I just would like to talk about promotion and marketing. It takes a lot of effort to put information out there in social media and print literature and design flyers and things. And we've actually done that for you to some extent. On our website, under the Lender and Realtor resources, we have flyers and brochures in English and in Spanish in PDF format that you can download for both the Platinum program and the Open Doors program, and even highlighting the Platinum Select grant piece of the Platinum program. And those PDFs have an area where you can co-brand and add your own contact information. You can put information with another agent on there, or if you're a loan officer, put your information on there, and print those off and use them to promote the programs or to educate home buyers. In addition, there's a form on that same page where you can reach out to Golden State Finance Authority to help you with other things that you're doing in education and promotion. If you are hosting a seminar or a workshop for home buyers, or maybe you're reaching out and educating real estate agents, we can help you with things like providing a speaker if there's a large enough group. If it's a webinar, that's even easier to do something virtually with you. If you just need some slides and visuals in order to present material, we can help you with that. So, you're not left on your own. There are some templates and marketing kind of products and things that we've already created for you. I highly encourage you all to look at those resources on our website. And then share the posts as we create them on Facebook and things, share these videos, share the presentations around as well, and then put your name to them.
So let's kind of wrap this all up. I'm going to go to each one of you, Jenny, Todd, and Don, and tell us what your final thoughts are, final takeaways. What do you want the audience to leave with today? Is there one gem you want to pull out, a success story, a case study you want to use to illustrate a point? But we're here to help remove obstacles that create delays. That's one of the things we've been trying to do, is tear down these obstacles, understand what causes delays and how to get around them. For loan officers, you're probably seeing refi business go down, looking at purchase business. What's your strategy to reach realtors and work more with first-time home buyers? And then relationship building between agents and LOs. What can we do better there? So Jenny, let's start with you. Final thoughts.
My final thoughts. Number one, this is not just for first-time home buyers. This is also for home buyers that are not first-time home buyers that are moving and need additional funds in order to move. Number two, I want to remind everybody that there is a program, the program 3 years. If you're a first responder, a teacher, a firefighter, a police officer, in the medical field, EMTs, if you use the GFSA program, day one, it is forgiven. Number two, if you are just a regular home buyer, after 3 years, it is forgiven. Where else can you get this information, you guys? Now, another thing I want to tackle, we're talking about relationships between loan officers and agents. I want to remind loan officers, it goes both ways. If you want us to refer you, you also have to refer us, because that gives us even more of a bond and more of a trust that you're willing to work with the other person. I have so many loan officers that are now calling me and giving me referrals because of how I'm doing the reverse. If I like somebody and I like the way they work, then I'm going to refer them. So I suggest that loan officers start doing the same thing, because they seem to be keeping the business to themselves and not looking for agents that they know that trust to give the business to. They're just saying, oh, just go find a realtor. Please find a realtor that actually knows what they're talking about.
Thank you. All right, Todd, final thoughts?
Okay, I just want to thank Jenny for stealing like 3 of my final thoughts.
Right?
To echo them a little bit, just it's important to know that this program is not just a first-time buyer thing and not just a down payment assistance program. It covers so many things, so many different ways for so many people, and can bridge the gap for you in so many circumstances. I'll get through a consultation or pre-qual with somebody, and then they'll ask and they may not even need down payment assistance per se, or they may not even need it one way or another, but they'll ask, is there anything available for first responders? Is there anything available for people in the medical field? Is there anything, things like that? And I'll say, well, actually, there's a grant program, and we'll have the discussion about it, and they fall in love with it. So there's so many benefits to it that you don't just, you need to paint the picture that it's not just for one specific purpose or another. It's very, very broad. So it can be used in many, many circumstances. So it's important to share that.
Okay, good deal. And Dawn, final thoughts?
Yes, kind of piggyback off of everybody. One thing I know that we haven't discussed 100% is these programs, especially you can do it conventional too, but FHA, you can get a non-occupant co-signer and they can help. So, okay, so you got their credit score there. We figured out money, but they still don't have the right amount of income. You have to remember that this particular program with Gsfa program follows all the guidelines. So yes, conventional, a little bit harder, but FHA all day long. Mom can, dad co-sign, grandparent, maybe a brother or sister. So let's really look at this. We've got somebody, maybe let's just say with a 640 credit score. Now we've got a co-signer. That person doesn't have to be on the title. They're just going to go on the loan. They're going to help them out. And they're going to get anywhere, say from, they can get as low as 0, but up to 5% down payment help. The other key thing is I really stress with everybody, well, yeah, but I've heard of how to pay it back. Well, maybe you do, but I need you to pay off a car in order to qualify. Okay, now you're going to use this money for your down payment and your closing costs, and now you don't have to pay off the car and be short, or you are paying it off, but you still have money left. So that's a big thing. And then the other thing that I was going to mention as well, and I left my brain, but I was really hot on the topic, I guess I apologize, but that with oh my gosh, I've been thinking about the whole time saying I wanted to say it because he had said it. It had to do with oh my Lord, the closing costs. The other key thing is interest rates. I really don't think that the interest rates on the down payment assistance are that high. Because right now we're anywhere, because I just double checked this morning, for 0% down payment help, but the program at 2.25, and you're going up as as high as 3.5%, 4%. Well, I mean, I've been in business over 20 years and it's hovered in that for the longest time, just because we've just recently gone into a little bit of a lull where rates were a lot lower. But if I can get you 4% down payment help, so, on a $400,000 house, I can give you $16,000 for free, and you're going to have a 3.5% interest rate. I always tell people, are you going to complain about that later? And 20 years from now, when someone's paying that, not getting down payment assistance. So they really need not to get hooked, just stuck on the interest rates. And again, talking with everybody here, all of us have all separate, we all have the same knowledge. So when you really dive into it, you'll just be amazed. Like you're going to I almost use it on every transaction that I can. So hands down, yes.
Yeah, if you're new to the industry, Call these panelists. These are the people you need to be working with. And Dawn, thank you, because you helped me remember what I forgot earlier, which was we also have to remember we are creating buyers in many of these cases. These are people that were not otherwise going to buy, or they were years down the road in their mind. So
Yes.
remember that too. And that needs to be expressed sometimes to the seller or to the loan officer, the realtor, whomever. So I'll leave you with this. And then Carolyn, I know you have some parting thoughts. DPA customers become customers for life. And I sort of hinted at this earlier, telling the story about a recent client that got help. If you get somebody down payment assistance help, they're absolutely going to refer their peers to you. And if we're talking about, the younger generation of first-time home buyers, you're talking about a large social network of potential home buyers that aren't there yet and maybe don't think they can be, but you help one, then they tell their peers. There's another path to business, purchase business at that. We do have a product called Down Payment Connect. You can learn more at downpaymentresource.com/DPC. If you are interested in using that as a lead generation tool to reach more buyers, reach more or educate more buyers, give them a path to down payment help, but through you, you can check that out. And if you're a member of CR MLS or Barris and you're a real estate agent, you have that as well as many other tools for free already. So log in and check that out. We also have a Facebook group called Down Payment Insiders. Melinda, who's our director of marketing in the background, she curates this group. These are your peers, real estate agents and loan officers all over the country that are talking about DPAs, first-time home buyers, the challenges they face, the solutions they came up with, the marketing messages that worked and resonated. So we encourage you to join that group if you want. You can listen in or you can engage and participate, up to you. And then Carolyn, any final thoughts? And you want to talk about some Golden State resources?
Yeah, here on this slide, which all of you will receive after the presentation, are just the links directly to our website to a few of the places that can provide some resources for you. The program index will get you to both the Platinum program and the Open Doors program. Remember, Platinum is up to 5% in assistance, but Open Doors goes up to 7%. The form of the assistance can vary. Don't self-diagnose your borrowers, though. The programs are a lot more flexible than you think, and they're not limited to first-time home buyers. We have an area for training and education and webinars, and there's videos, as I mentioned. There's marketing literature, and of course, the list to our approved lenders. I want to, as my takeaway, just thank the three panelists for being a part of this today, because we're out there doing education and seminars like this all the time. But it's really the hearing from the actual loan officers and actual real estate agents involved in these transactions that can say so much more than I can. You get to hear firsthand the flexibility. You get to hear how much that they like these programs and how they are making home buyers achieve their dream. And I just want to thank you all for participating in today's panel with us.
Yeah, I want to echo that. Jenny, Dawn, Todd, thank you again. We know you're taking time out of your day to help educate potentially some new realtors here, new loan officers, or those looking for new, growth channels, growth markets. So we all definitely appreciate that. We've given you Todd and Jenny and Dawn's contact information when they were offering their final thoughts. We will send this deck out with the recording. And here is the Down Payment Resource and Golden State Finance Authority contact information. Melinda, Veronica have been in the background answering your questions, but Mel, anything we can answer here? I know we've gone over, but we still have a large audience. So if there are any lingering questions, and if our panelists don't mind, we can address those for a couple minutes.
Hey, Sean, sorry, this is Mel. I'll be honest and say, and humbled and say, some of these questions have been a little technical for me. So Veronica's been answering most of them, but I do want to remind everyone that's still on the call, because we've had this question a few times, as we always do. We have recorded the session, so don't worry if you missed any of it. We'll be sending that out after the session. We'll be sending the recording out as well as this presentation to everyone, so you'll have this information.
And I just want to have a big thank you to you, Sean, Veronica, and Mel for helping us put this presentation out there. Down Payment Resource has been a wonderful organization to work with for the last 5-6 years. Thank you.
Yeah, real quick, Carolyn, are you on Instagram? Is Golden State Finance Authority on Instagram?
We are not on Instagram as of yet. We're on YouTube, Facebook, and LinkedIn.
Okay. Let's see, we've got our contact information up here. Veronica, were there any technical questions or themes that we can address real quick while we've got all the experts on the line?
There was one question that really hit me, and I know you guys kind of touched on it a little bit, but someone, Tim Stacy specifically asked, burning question, what would be the advantage or disadvantage for a nurse or whoever would qualify using Gsfa's Platinum Select for DPA if DPA is not needed, great FICO and income? And my quick response was one of the advantages would be to use Platinum Select grant and keeping borrower funds in their pocket for purchasing new furniture, rehab work, or save for future needs. And I didn't know if you had anything else to add to that.
So why don't Carolyn, Todd, Dawn, Jenny, why don't you guys offer your answers and then we'll wrap it up with that one.
Forgiven day one.
That
That's
is
the
the answer,
reason.
actually. Yeah, that forgiven day one. We've had circumstances where people did have some of their own funds and really didn't need it, but then the thought of things that they would like to do with the home after they moved in and budgeting for other things and understanding that it's forgivable grant from the get-go. It was almost a no-brainer, and it didn't impact their interest rates. Their rates are extremely reasonable, and so no, it's almost a no-brainer. It's you really don't need to sell anybody on it when you just discuss the program parameters when they're in the select category, honestly.
Yeah, and I think if we've learned anything in the last year and a half, there's a lot of unpredictabilities in life, and being able to hold on to some cash, might be a better option sometimes. And it also allows you to kind of look outside the box at what you're purchasing, because if you can hold on to, 10,000, 20,000, and you can put that into the property itself as improvements, then you can look at more variety and inventory out there.
I also, in the beginning of COVID and during COVID, I was pushing a lot with this program for nurses and doctors, because a lot of them didn't feel comfortable going back home to their families because they thought they would get them sick. So a lot of them were actually trying to purchase homes, maybe their first homes at that point, and then moving in the whole family in eventually after. So there was a lot of questionable living areas when COVID hit, and a lot of people were sleeping in their garages, so they couldn't even be with their families. So I think this was something that, for me, when COVID hit and we had this catastrophe happening with these families, my first thought was, let's get you in a house, stop living in the garage, and then figure out the family situation with this COVID thing once you can. And it was a big deal to all these nurses and doctors because they didn't realize that this even existed.
One of the questions that I saw come up, and a little bit of discussion around it in the chat, had to do with loan limits. And so I just want to address that because that might be of some concern to both the agents and loan officers on this call. Our current loan limit, which again is just the limit on the mortgage loan that we can finance with our DPA programs, is the conforming loan limit, 548,250, whether it's a government loan or a conventional loan. That is Gsfa's loan limit today, but that's not a purchase price limit. That's a loan limit. If that conforming loan limit is increased, Gsfa will most likely follow suit. However, that's conjecture right now. We have not seen anything, we have not seen a formal announcement of those conforming loan limits changing. And so our guideline.
Okay, good deal. I'm sure there are other questions. Our contact info is on the screen. The slides in the presentation will go out with Todd and Jenny and Dawn's contact information. Thanks again to all of you. Carolyn, thanks for putting this together. We hope everybody has a wonderful day, and go out there and talk DPAs with your clients.
Yes, thank you, everyone.
Thank you for having us. This will be great.
Thank you, guys.